Hey everyone, I want to go over why it's so important to sell after a major catalyst event, like an earnings, like an analyst upgrade, after some kind of major news event when everyone else out there is going to be chasing. So if we are buying options like we do, we're option buyers, right? And we're playing some kind of event, like in Alibaba. What do we have for worked option members? Well, we did the 135, 140 warped option, or a bull call spread. You might know it as. So we had the earnings. As you can see this morning, we had a big pop, and now we're almost $10 off the high. So let's dive in a little bit deeper and think of the human emotion. And of course, if you want to use the master indicator, you can. If not, you don't have to. Maybe there'll be a link down below. So let's just first think about it. Market opens, usually takes a few minutes for the options to open. So with shares right around 140 or so, what do? We sold out of the bull call spread. Now, why is that? Well, most people, they're going to turn on their CNBC or their Bloomberg, and they're going to see right at the open that shares of Alibaba are up. Baba's up, I don't know, 10, 12%, whatever it was earlier today. Yay, I want to go in. What do they think? To buy, because it's the hot stock while the overall market was selling off, to be fair. So they go and they buy up here. What we want to do, since we're already in the trade, is we want to sell our options to those buyers. And what happens too in the first about 10, 15 minutes after an earnings event? Well, I'll go ahead and show y'all. Implied volatility starts to go down. So if you're long options or you're in bought an option as a debit, you obviously want volatility to go up, stay even, not to go down, because then that's going to be bad for you. So if we play volatility here, you can see volatility went up all the way because here's where the option started to open, and then volatility just fell off a cliff, as you can see here. And funny enough, so did the price of Alibaba. So the call spread we sold 270 is now about 170, so it's about $1 lower, and shares have faded lower. And you see how shares have faded lower? Not only has vol came down, but look at the volume, right? Everyone is chasing after a catalyst or at the open. What we want to do is we want to sell to those people chasing, buying with FOMO. So think of it this way. Always do the opposite of what everyone else is doing. If you see CNBC talk about this stock's a buy, sell it. If they say, hey, this stock is horrible, you probably want to buy it, honestly. That will help you in your trading so much. And also, if you're playing an earnings catalyst or something, you're in for the event. After the event, hey, there's nothing left unknown. Everything is known. So you don't have any reason to stay in the trade and move on. There's thousands of stocks for the next trade. Make sure you get the news flow scanner. Make sure, if it's even open, you become a member of Warped Options. We're 3 for 3 just this week. Microsoft, Lamb, and Baba, 170%, 50%, 49%. Can't get much better than that. Make sure you like, subscribe, leave a comment, all that jazz. I'll see you on the next video.